This is Jan 2023, a new year, and you're observing CFA Institute coming out and publishing this. That means a lot, and precisely that means a lot for assets like XRP. They are looking for what's a hype, what's the real use case, and what is the real investment perspective in crypto assets. Now, the importance of this need to be first understood clearly. CFA Institute gave the charter license for portfolio managers, the CFA charter. You see these names, CFA and CFA, they are big guys in the banking industry, in the investment industry. So you look for all these big portfolio managers in the banks, in the investment organizations, all of them has this. So when the CFA take a look at this asset class in detail like this, it means they are actually trying to show you they're entering into this space. And inside this document, it clearly shows you institutions are in here from 2021. Around 150 to 200 institutions are participating in crypto market. And they give you all these ideas why they are doing this study, why they think this can be alternative forms of money or currency, store of value. They look for the concerns, they look investment versus speculation, they look for all the use case, they look for how this can be the next leg of investment, the Web3. They give you how regulators are looking at this. They actually look in detail about the US, about the European Union. Now, does that actually make real sense for us? A lot of it does. A little bit area didn't go through my head because I think like, okay, they are still early, they're in the learning phase and they need to do more in some of the areas. But as an XRP holder, I'm so much happy that they are going through this rigorous process and they actually understand what it actually means to be investing in this ecosystem. They actually talk clearly about the intrinsic value. A lot of people do not actually even understand crypto has that. And a lot of people do not understand the fundamentals. They think, now these are from the status quo, the bankers, the banking institutions, the small guys, not the real big guys. And here they really talk about the intrinsic value, the use case. And we know what type of use case they are talking about. As you go through in this document, they actually take you through a lot of crypto assets, I agree. Not only XRP, but the market itself. And primarily they talk about Bitcoin and Ether because it has the regulatory clarity. Then they go through these. That actually gives you some idea what they are looking at. And as you continue further to the downside, they actually show you what use case they are looking for. And that's where they make a small mistake. They're considering Bitcoin and Ether for Forex transaction. They were not designed or built for that purpose. There are few like XRP, XLM, HBAR, Quant, which is actually clearly designed for this use case. Banks, central banks, all of them are actually using it. Financial institutions are using it. Especially XRP is there in 40 markets. That is 40 different currency markets. And institutions are using it clearly. 40 billion trading volume is not actually small. And 29.1 for Bitcoin is much smaller than that. Say 30 for Bitcoin and 40 for XRP without regulatory clarity in US. That is actually huge. Now, yes, we are going to actually go through this document and see what these CFA portfolio managers are going to get and what they will be looking to invest in. Whether they will look to invest or they're going to move out if they are in, or they're going to actually come in with some amount of new money. And if they come in, which type of assets they're going to go in? Can that be XRP, one among them? That's what we're going to look at today. Welcome to the Scientific Investor family, where the normal retail guys learn how to become the next top 10%. Last 7 days, the market is showing you some change. Last 30 days, some of them are looking really good. On the other side, if you are there in the market, you also should be looking at opportunities, meaning those are undervalued right now and may actually go do something like this. right? So you're in the market, you're observing all these assets doing like this, and you do have opportunities in the market. Look for something which is down, but it still has fundamentals and it's starting to trend higher. That should be your entry. But yes, you do see the market changing. You do see new money coming in. And as we discussed previously, this is one of the important things which we looked at last day. And we told like, okay, there is going to be a small move. We are going to come here. That's the measured move. Right now, you come to Bitcoin and you see, yeah, we closed there. We had a wick above that, but the price closed there. Now, you have the first support here, then the next support here. The RSI suggests it has room to the downside. MACD suggests it can actually come down. So it may actually take a day or two to first confirm which support we are going to adhere to before we actually bounce. Now, the same goes with XRP. We actually talked about this too, that XRP is breaking higher after a long time. So it should get a retest before it actually bounces further. Dollar is still dropping. You see the market is still responding. So you broke higher. Now you are going to do that retest. It should hold and then bounce. That's what we are anticipating. Now, with this document from the CFA, it's not only that which is important. You need to go look at what happened in the past. You need to see what the real fundamentals look like. So it actually gives you an idea that banks around the world is on this technology for a reason. Foreign currency exchange, forex trades, because they need to move money around the world, cross-border transactions. And then you actually see this. And I'm like, yeah, they should feel that because they actually understand this thing. And this is coming from CFA. Now, if they're putting out a research report now, then clearly they are working on that from some time. Look at this. CFA is actually showing you chainalysis.com, which we've been using from some time to look for daily volume. I've been using that in the videos regularly from some time to give you the right idea, right? We actually look it up before we say, okay, whether new money is coming in or going out, whether this asset, Ether or Bitcoin, is coming into the exchange to cash out or going into the market, right? Now, one of the big things here in this report, which we all have to understand, is that they do look through a lot of concerns because it's their job to put up the security. They really want you to be well educated as a portfolio manager before you even think about cryptocurrencies. So they actually go through the centralized, decentralized. They try to do a lot of different things inside this so that they cover. But understand this is kind of the too early stage for them. So there is a lot of learning curve, agreed. But still, they have done a lot of work and they have done a ton of research giving you how things actually work. So hot wallets allow better control and interoperability, but are still exposed to the risk of theft or fraud. Agreed. Now, you can't do anything with that, but when the central bank digital currencies are out, now that's going to be surprising for a lot of existing CFA holders who are not going to be updated with this. So in a year or two, you will literally observe that portfolio managers are going to do this. Now, in page 17, you see this. Crypto investment funds. They are already in, which is the important thing. According to PwC, Q1 2021, around 150 to 200 active investment funds invested directly in coins and tokens as their main investment strategy. Wow. Wow. And 81% of these vehicles were launched in 2017 and 2018. So there are a lot of them inside this. And this reached 3.8 billion globally. Now, the cryptocurrency market after the fall is like say 800, 900 billion. So this is really small. We went up to 3.5 trillion, around $3 trillion, $3.5 trillion in 2021. So the amount of money coming in at that time was really low. Imagine the next time we go up, these institutions who made 50%, 100%, 1000% in crypto, and they're still making 7% in traditional finance, what will they do? If they did 3% last time, they're going to do 30%. Okay, maybe that's wild. They can do 10%, right? Now, why do I say that? inside the same document, the same CFA document, they actually give you the understanding of whether you should invest in this asset class or not. And if you are investing in this asset class, what should you do? So as a starting point, they give you the idea, limited portion of total assets under management can be exposed here, right? I use a limited portion of assets under management exposure as a starting point. So they are talking about starting this, what? Investing in crypto. And when they talk about investing in crypto, what do they teach you? At the starting point we talked, use cases, fundamentals, the intrinsic value. If they can do analysis on that, they are going to look for that asset. If they are like, okay, there are 20,000 assets in this asset class and they don't even know what that asset stands for, they're not going to put their money in. They're not going to actually even talk about that to their investors, right? Great. So now you have that level where they are really talking about it. But rather, it provides a framework from which to set forth a risk-based strategy, asset allocation at a portfolio level. So they are talking about putting money from these portfolios into the crypto market based on proper research. Understood? They're a regulated institution. They're not going to go directly into unregulated assets. They will look for projects, protocols, assets which are working with regulated players. That is a huge advantage for XRP Ledger, where Ripple and others are driving the post, right? XRP Ledger is being used by a lot of different institutions who have connections with Ripple, without Ripple, and it is still solving the problem. Now, this is an approach described by the CFA Institute Foundation guide here, 2021. Now, they are looking at this. And in 2023, they are coming out saying, okay, now you can actually put your money in. So they really took 2 years to even understand that this technology is here to stay. Fine. It's still too early and it's about dealing other people's money. So you should be concerned about every single step so they are doing their duty. Clear. Now, as you come to the downside, the crypto sector needs to institutionalize, and that's where I have some issues. Meaning, say for example, we saw our institution like FTX doomed. Now, that's an institution who was really meeting with the SEC in the US every now and then, and that happened, right? So that is not the real thing which we really want to see. Then custody is a problem. So like the US or the Europe, some of them are saying like, you can't hold your tokens. That's not good. You need to be holding that token with an institution which is regulated. Now I'm like, okay, right now your cash is in your wallet, right? You don't actually give it to a bank. Now, there are places where you only use cards. At that moment, it's similar. Your value is locked up with these institutions. And if they say, okay, your account is frozen, done. You can't buy grocery. You can't buy anything. Whereas in most of the other parts of the world, you have cash inside your wallet. Same. You buy the value, asset, whatever you keep inside your wallet. Great. So that's going to be a little bit of conflict, and they will understand that crypto ecosystem is something which they cannot actually control that way. If I'm buying into an open source ledger in that asset, I keep that with my ledger. I keep it in my wallet, right? It's up to me. Now, as we continue downside, now they actually give you what they are looking as a framework for investment. What would be the turning point to convince institutional investors of the validity of crypto's investment case? Institutional investors and asset owners are waiting for the following conditions to be met. So they are waiting to put in more money into this ecosystem. That's clear. Now, what are they? They are ready to consider a material exposure to crypto assets or the technology that is underpinning this development. Great. That means significant amount of money is going to come into this asset class. 1. Clear regulatory framework. Now, some nations already have it, like US, Japan, Switzerland, Singapore. You have a lot of countries who are already actively working on that, like say Europe. US is a little bit too slow on this. Agreed, they're too slow on that. And that's why we think like, other countries like UK, Singapore, Switzerland, they're going to actually create institutions Like we had an internet era, Google, the Amazon, all these big guys, the Microsoft, all of them came from US because they provided the regulatory clarity at that time. But this time around, it's not that. You're going to see big institutions coming out from different parts of the world, for sure. Now, then the next one. You actually see institutional investors, asset owners, and pension schemes coming into this ecosystem. So when they come into that, recently we have seen pension funds from Canada or lose money from FTX. And I'm like, okay, from August, we are talking about FTT going down, but we did not know FTX as an exchange is going to collapse and it was a fraud happening inside, right? We knew FTT is going to drop, but it was really hard to actually even understand FTX is going to collapse, right? Now, as it comes to the downside, they talk about institutional investors, how they choose the exposure, directly or indirectly. That's next possibility, right? They can actually do it through a third party and not touch this asset till they have the regulatory clarity. And that is something which we all have to think about. Now, DLT could significantly enhance back and middle office processes in the financial service. We all know that. Now, a source protocol such as Ether can be developed into large-scale banking infrastructure and be made entirely digital, automated, programmable. That's where they get it wrong. There are central banks who tried this with Ether and then came out and said, okay, the technology is good, but this is not scalable. This cannot be scaled to our use case to satisfy all our needs. Great. And you look at a lot of hacks in the last 2, 3, 4, 5 years, you see a lot of it happening in Ether. You don't see it in XRP Ledger. You see that in Ether, right? So they're still in the early phase of learning and they really don't understand what is the difference between these protocols, how they are created, because the real use case which they are talking about is reducing friction, clearing, settling, transferring for financial transactions. And we really know what type of assets are actually created for payments use case, which are being adopted by institutions to just do that, and they're using it on a daily basis, right? So some of that areas will come in, and I'm saying in a year or two, when these guys come out with their new report, new research, they are gonna highlight that for sure. Now, as you go to the downside, it actually gives you central bank digital currencies, and they know it's coming. And as central bank digital currencies come out, that's when you are going to see a huge change. They suggest that if that's coming out from the central banks, it will push more adoption for the private cryptocurrencies. Why is that? Right now, a lot of people do not know how to use a wallet, how to use the transaction, all those stuff. But when the CBDCs are out, they are forced to learn that. And once they learn that, now they will actually look for, okay, there are different things which I can actually use, and they'll start getting exposure to these, because the CBDC is now going to go up in value. If it's like fiat currency, it's just going to depreciate with the monetary policies, right? So they will also look for something which can hold the value over time. It will be volatile, but it gives some value. Now, they actually come here, they actually look for what they look in the stock market, the cash flows, the earnings, the balance sheet. They don't get all these. If you guys remember, we are talking about this from 3 years. If you are in the stock market, you look at these. If you are in the crypto market, you should be looking at these. We have done a clear-cut video in our channel about that. And that's one of the most watched video in my channel. And if you go through that, and I'm like, there's a lot of videos in which we describe through all these documents, like the Bank of International Settlement, the World Economic Forum, the United Nations document, central bank documents, all of that agreed 100%. But we also did clearly talk about in one video about the things we should be looking at before you put your money in. The further fundamental analysis in a whiteboard session, right? So now you come back to that, the intrinsic value of crypto assets and how they look forward to that. Now you go down. Now this is a big document. We won't be covering it entirely. Global number of users for the crypto ecosystem. This is really important for them. Why? Because there are countries like India where you have average population which is below 30 years is like 700 million. That's big number. They're all entering the workforce. Maybe next 5 years, they all start to invest. Maybe it might not be in millions, it would be small numbers, but they still add to the assets under management and their commission. So automatically they're going to give them a chance. Now we come here, look at identity verified crypto asset users. Not a lot. Like if you're using Bitrue or Binance and you have not identified your identity, then you're not in the list. So we know that it's much higher than this, but still this is 300 million users of cryptocurrencies. Now, one issue with that is we still don't know how many of them are unidentified. So it can be 600 million or even a billion. We don't know. But at this point, we can say, okay, 500 million. That's for sure. That does mean there is a lot of people looking at this asset class as an alternative forms of money or currency or a store of value. Because yes, it's heavily volatile, but if you look at last 5 years, that's what they look at. Like they don't actually look at the market for next 12 months, next 12 months. Most likely they're looking for 3 years, 5 years, 10 years horizon. If that is the case, then you know what's happening in this ecosystem. Most assets have performed way bigger than what all the other asset classes have done in last 5 years. From 2017 to date, if you take that, XRP has done 1400x. There are assets which have done like millions of percentage. That can be one off. But there are a lot of assets which have done 10,000x, 5,000x, or at least 1,000x, right? So that means, yes, it's volatile, but it's going to go up in value if you choose the right asset. Now, they're actually showing you the difference between Bitcoin, gold, and US index. But there is a little bit of discrimination happening here. Why? They're showing you the movement on a limited time frame where the actual run-up is over, right? So they really want to show you the USD index is going up, and we know when USD is going up, gold goes down, the asset classes goes down, crypto also goes down. But if it's me, I would be taking the gold for last 10 years, and then matching it with the stock market, matching it with the crypto ecosystem, and I see a massive fluctuation here, but they don't do that, right? They also have funding, they also have to look at all those stuff. They could not actually, just pin their counterparts, the shareholders. They need to actually be limited. But once you are going into the market to the investment area, now you cannot afford to do that. If you're looking for next 3 years, you should be looking for last 10 years or 20 years to learn from history how the market participant psychology moves. Because everyone agrees that the market psychology is one of the most important things you should look at when you're investing. Now, going down this, there is a lot of speculation. Even all of us agree on that. But they also have investment use case. So in next 1 to 3 years, you are going to actually see a huge amount of money coming in from a lot of different portfolios across institutions, retails, all of them coming into this asset class because of the tokenization. Real economy assets are being tokenized. We have recently seen XRP Ledger is being used to tokenize real estate, the land in different countries. That does mean something. If you are seeing 1 or 2 countries do this, automatically the actual value for that protocol is increasing. The network is now bigger. Network participants are more. That's automatically the network effect. Basically, the value will go up. Now, keeping all of this in mind, you do look at the entire ecosystem and actually look for, okay, these are what they are looking at. Which means in next year to 2, a lot of investments are going to come in. You actually saw them directly saying, okay, limited exposure to this asset class is going to be great based on the use case. So here we are looking at the use case from time to time and understanding, okay, this protocol is growing and these are the institutions using that network and having the ability to use XRP Ledger, right? Before it was like 3 different products, XYR and all, XCurrent, XYR and all. But right now you don't have XRapid. What you have is on-demand liquidity with everything. If you want to use that, you can. Just most banks which use that is that they have the regulatory clarity in that geographical region. So right now this is going to be big. Changes are here in the economy. So we do understand that the market value is really important. understanding from the market is really important, because once you are here in the market, now you look for the psychology of the market, how the market participants behave. Even if you know the fundamentals and you know this asset is great, now the question is, when should I accumulate? What's the possibility in the market? Indicators, is it actually giving you the real thing? You are there to make money. Maybe it's a year, maybe it's 3, maybe it's 5, no one knows. But when you are there in the market for that time frame, you need to make sure you get the proper ROI for that. So guys, if you understood something from this video based on the fundamental side of this and you received value, please do hit that like and subscribe button. And if you have another 5 more minutes, I suggest you going into this channel of mine where we talk about success in life. So guys, that's it for today. I'll meet you on the next video. Bye-bye.